and growth in current times. Finance, we believe, has the power to reshape any business. The COVID-19 pandemic has thrown the world economy into a tailspin during the last few months. To keep economies going for the time being, central banks have cut rates off cycle and injected money through emergency measures. While the wheel appears to be falling off, those who survive must look for possibilities that arise among the chaos. We must modify the way our financial institutions are operated. We must adjust quickly to this new normal. The pressing question for financial risk management professionals is how risk management must realign itself to the new realities of the post-COVID-19 environment. So in order to gain insights and perspectives of successful industry executives, we have 5 accomplished finance leaders from significant corporations. It is our immense pleasure to have Mr. Puneet Dhawan to be an eminent panelist at the first edition of the annual finance conclave, Vriddhi. Mr. Puneet Dhawan is the CFO of Mars, globally known chocolate and pet food brand. He has demonstrated a history of working in the food and beverages industry. He is currently managing the pet food as a segment as a CFO. He is a strong sales professional with a chartered accountant focused in commerce from the Institute of Chartered Accountants of India. Sir has also done IIM management program from Indian Institute of Management, Ahmedabad. Sir has 10 plus years of experience in the industry and has worked for esteemed organizations like PepsiCo, Nestle India, Ernst & Young, and Deloitte. I welcome you, sir.
Thanks, Bhavna. Thanks for the
Our second panelist.
Sure, go on, Bhavna.
Our second panelist for the day is Mr. Raghuvati Mishra. Mr. Raghupati Mishra is the Chief Financial Officer at Liberty House Group. With over a decade of experience and competence in different sectors of company, he is a dynamic and seasoned management professional. Sir displays a proven track record of turning businesses around to become EBITDA positive, as well as establishing new enterprises, including the implementation of processes and procedures. His specialities include fundraising, debt restructuring, company strategy creation and implementation, and mergers and acquisitions. He is an expert in SAP accounting, legislative compliances, corporate governance, risk assessment and mitigation, and other areas. He has experience in a variety of industries, including information technology, steel and energy, and greenfield operations, to name a few. We are honored to have you with us, sir.
Thank you.
Next in our panel, we have Mr. Alok Garodia. Sir is the former Chief Financial Officer and Business Leader of JCB India. He is currently serving as an independent financial advisor. He has over 25 years of professional experience working in India, Asia Pacific, and Japan. In large businesses such as Pepsi, Nokia, Nike, and Lenovo, he has worked in B2B and B2C segments spanning different industries. He excels in business partnering, influencing and decision-making with other corporate areas such as procurement, supply chain, human resource, project management, structured finance, treasury, and legal to achieve company objectives and create value. He was also a part of the Financial Leadership Program 2019, hosted by INSEAD Business School. We are honored to have you with us, sir.
Thank you, and look forward to the next 60-90 minutes with all of you together.
Thank you, sir. Our next panelist is Mr. Hitesh Uppal. He is a seasoned 18-year chartered accountant. He has vast experience working with leadership teams, cross-functional and cross-geographical teams across different time zones. Sir is a qualified information system auditor, certified ethical hacker, and certified IFRS expert. Sir is known for assembling excellent teams that drive innovation while also ensuring that financial knowledge and financial disciplines are included into all decision-making processes. Sir has been awarded with the Strategy Leader of the Year 2021 and CFO Powerlist 2020. He has also been honored with CFO of the Year 2018 and Financial Leadership Award 2018. We welcome you, sir.
Thank you. Thank you.
Our next panelist for the conclave is Ms. Tanisha Govindarajan. Ma'am is the finance director at L'Oreal. She is leading the finance function across 30 plus countries in the South APAC, Australia, New Zealand, Middle East, and North Africa region. She has over 18 years of professional experience working in diverse roles ranging from corporate strategy to regional finance director. She has worked in the FMCG industry's leading businesses such as Heinz India, Cadbury, and L'Oreal. Ma'am is a CA rank holder and has completed the Young Leaders Program from Singapore Management University and under 25 executive programs from IIM Calcutta. It is our privilege to have you here with us, ma'am.
Thank you, IIM Kashipur, and looking forward to this session.
I would now like to invite Abhikant to take this session forward.
Thank you, Rahim. A very good evening to one and all. I would like to acquaint the panelists with the flow of the event. Firstly, I'll be posing the questions and then the floor will be open for all the panelists to share their thoughts. With the hope for a fruitful discussion, let's move forward with the panel discussion. So I'll start with the first topic. The sudden surge of COVID-19 cases across the world and the subsequent lockdowns that were imposed, including in India, had a direct impact on the businesses and economy. The economy has gone through tumultuous times, facing several extreme ups and downs. As you all are from different industries, we would like to gain some insights as to what your assessment of the current economic conditions are and the financial situation of different segments. Raghupati sir, if you would like to share your thoughts on this.
Thank you, Ravi. Good afternoon, dear students and my esteemed panelists, co-panelists. Pleasure being with all of you today evening. And I think the next 90 minutes or so with you will be quite enjoyable for all of us. So if you see Ravi and Rahim before that, currently where we are in terms of the economic scenario, especially in India. If you see that, let's discuss India because we are more concerned about that and where we are kind of things. So for that, I'll give you some basic facts that you and we all are being reading there and what are the indicators. Then we'll discuss about that and what does it mean for all of us in future and how our country will be doing about it, how we'll go from there. So if you see, Sensex is one of the key indicators of any country, what is the financial conditions of the country. We are just shy of 60,000 level, kind of 57, 58,000. We are there, just shy of, this is unheard of in the last few years. If I recall in 2014, something around 20,000 plus minus 5% we were there. And now in 7 years time, we have tripled. We have tripled from there. If you see the GST collection, if you track the GST collection for the students, let me tell you, GST collection is what actually an invoice is raised and the GST has already incurred. So the sale has already incurred. So there is no estimation or something like that. So people are buying. That's why invoices are raised. So GST is there, which has been collected. Is basically the highest, 1,23,000, 1,13,000 kind of crore per month, kind of, if you see last 3-4 months. Which is more than the pre-COVID levels even, right? And it's booming. Direct tax collections, I was told by a few of my friends in the income tax departments at CCIT levels, they are saying 40% normally what happens is that in the first 6 months, we collect around 40% of the total collections and the next 6 months, we collect 60%. So if we see what we have already collected, something around 5 lakh some crore, they were quoting me. I don't remember actually. And the next 6 months, it will be something around 6 lakh something. So more than 11 lakh crores, which will be around 25% higher than the last financial year. So this is direct tax collections. If you see the data regarding your petroleum fuel consumption, it is more than 90 to 95% kind of consumption than the pre-COVID level. Even if there are restrictions in place, people are working from home, etc., going on. Around 50% of industry are still working from home, who consume most of the fuel and all, traveling and all. If you see, the car sales are also quite high, almost like pre-COVID level. But the queue in the, if you desire a car, it will be 1 month, 2 months, 3 months, 6 months even for the desired level of desired car, that the desired model that you will have. And I was looking at the figures of discounting and all, looking at the industry experts. There are not much discount this Dussehra and Diwali. So if sales are robust, the distributor and the companies don't have to resort to discounting their products. So it's quite robust sales they are expecting. The figures are yet to come in. So if you see the kind of where we are in terms of India, that we are, I think, as you must have seen the ISRO launching different rockets and all. So there are different stages there. So I think India is at the third level, getting into the next orbit, where kind of it will be placed. So I'm deliberately telling ISRO, I'm not telling NASA, because we don't see nowadays NASA launching too many rockets. It's ISRO we can see nowadays. So that's how the transformation has happened. In fact, ISRO is launching too many rockets for different countries and earning money. So India economically is getting into the next orbit. And I'll tell you quite a few reasons for that. What is our planning, the government of India, the industry, how it is going, the planning is. If you, by any chance, you have seen the Gati Shakti master plan that was launched the last Ashtami, 4 days ago, by the Honorable Prime Minister of the country, you see 100 lakh crore. So first, when I heard, I couldn't believe. I thought that maybe I am not very keen this thing, but I reheard, reviewed it. So it is kind of 14 zeros. It is coming. So 100 lakh crores to be invested in infrastructure. And what is the infrastructure? If you see, that is optical fiber to all the villages. There will be around 38 new airports coming up. There is the railway line. If you recall before, the railway lines, many, at least from our childhood, we see that there will be a single line. So if any other train is coming, your train will be stationed at some station, and then the other train will pass, and then you will go. So the doubling of the lines are happening. Also, the electrification of the trains are happening. So you see, the travel time is very fast, and also the fuel consumed is not petroleum or coal. So you are saving foreign exchange on that, and green energy you are consuming. Then you have highways. Highways, I think 1 lakh kilometers of highways in the next 4 to 5 years to be made. Then we have the gas pipelines are getting another 15,000 kilometers are being done. 11,000 kilometers are already at different stages there. And then you have the electricity connections are for grid for getting the power from surplus states to the more consuming states, kind of. So then we are having around different corridors for textile mills, for petroleum products. We have a pharma corridor coming out. We have defense corridors at 5 places, where at least 60% of our defense imports will be indigenized. It will be produced here. So what does all these things means for us is that when there is an infra push, then it has a spiraling effect on the economy, the steel, the energy, people get employment, and one direct employment gets generation to 5 indirect employment. So people have the purchasing power in their hands and they purchase, they consume. Now, if as you see during the COVID and all, there was less purchasing power and people were only consuming what was necessary for them, not the kind of discretionary thing. My co-panelist Tanisha will see how L'Oreal is doing at this point of time, cosmetics and all, clothes, all these electronic items. People are not purchasing much. We're not purchasing. Now it has started again. So only the immediate concern, what is bare to basics kind of thing, consumption will be there in terms of this. Now when people will have more money in their hands, then they will purchase more, then it will have a spiraling effect on the economy and our growth rate will be more than 10%. This is the general perception of economists. I do meet my co-panelists, many economists also at different forums also. So I take their feedback also because they are more aligned to kind of the economy, how it is happening. I discuss with my fellow CFOs at different industries, how their industries are performing. So if you would have asked me in economy, next 18 to 24 months time, we will have enough to, we'll have so much orders to that we can't produce. We will have exporting more to many people. This are manufactured by India. This will Australia and all. So going to export. So there will be enough and all for all of us. Indian economy.
Sir, I think there's a connectivity issue. We are unable to listen to you. So meanwhile, we can move on to the other panel members. If any other panel members would like to throw some light on the discussion.
Sure, Bhavna. Maybe I can pitch in a little. So I think the question was more related to post-COVID. What is the current outlook of the economy, right? I think what my co-panelist, Mr. Raghupati, mentioned is very true, which is these are the very core fundamental economic indicators of any country. But if you see, largely it's what are the kind of investments being done on infrastructure? How strong is your currency? How strong is your stock market? And how are you driving your people? Which is your biggest. If you see India, the greatest strength of India is the young population that we have, which we haven't yet harnessed well. Okay, that's at a very fundamental economic level. But if you look at market and industry outlook, I think the worst is gone and the best is yet to come. Because a few years ago, the government took very fundamental decisions of bringing in GST, the demonetization. A lot of digital efforts were done. I think the government was pushing it down our throats because India, unlike a China or a US, has been quite behind in terms of digital transformation. But what the pandemic has done well, and we should actually, so we should be in a way looking at it as a good crisis to have. Is that it's digitally transformed the country across all industries. I don't think there's any industry left as of now where we are not seeing a digital transformation. People have evolved how to do sales, how to market their products, and it has also put Indian talent on the global dashboard. So now it's no longer the location which is a restraint. So if you're a talent, you can be sitting anywhere in the world and working for the best of the companies. And that is something which is very different, let's say a year or 2 years ago, right? So there is a positive outlook to what has happened in the last 2 years. The good news is also that large part of the country is already vaccinated with first dose, and let's say more than 50 to 60% of the population would be vaccinated by June next year. So it gives us a certain level of confidence to say probably by first or second quarter next year, things would be pretty much under control, hopefully. And then from there, I think basis the economic indicators, there will be an upward trend. So it's true that during the pandemic, some industries benefited a lot. Let's say the pharma, the digital, all the fintech companies benefited a lot. But what it has done to all the other industries is transform or you will be dead. So a lot of industries have gone through huge transformations in a good way, and that is going to give us a huge leverage in the coming years. So overall, I would say the outlook is pretty positive.
Yeah. So I would also like to add from our perspective. I represent MagicBricks. So in the real estate. So when the COVID-19 started, so many things happened. One, home buyers likely to postpone their property purchase decisions, delay in supply of construction materials leading to shortage of labor. COVID further pushed the delivery timelines. Company, what Tanisha rightly said, that company worldwide have announced a remote working, which not only enable a kind of work from home environment in India, but also people at different geographical locations are now reachable. Third, fourth point is the COVID has resulted in closure of mainstream revenue for retail outlets shut down, entertainment ventures, malls, all get shut down. But what we have seen during the COVID period itself, there is a sizable demand popping up in the small cities. So the demand from the top 8 tier cities moved to emerging markets because people are moving back to their hometowns. They started investing in, earlier they're looking for say 2 BHK flat, they're looking for 2+1 kind of a small room which can be converted into their small office. So there's a small demand pumping up. Even in the first quarter, I remember clearly of the COVID, when we did a dipstick analysis of our metrics on the site, there is a there's a net demand increase close to 2 to 3% in the COVID period itself, which clearly shows that although many sectors are getting impacted, but real estate is still alive or a kind of popping up. And the last 2019 and 2020, a kind of a slowdown year for the real estate. But as of now, where we stand, the last quarter was one of the highest quarter for us. One of the highest quarter in terms of all metrics across our site in terms of demand, supply. So demand generally comes up in terms of your listing on the sites, means everybody is posting listing for getting this property. Supply comes from the traffic on the site. So all the metrics we have a pre-COVID level are kind of highest as of now. So that's a positive outlook, comfort that's coming in. And I believe the real estate shows if the real estate is getting into a positive trajectory, most of the metrics of the economy will also fall to that because employment is getting generated. People are going back to their workspaces. Even most of the company who initially said that they will work for maybe a perpetual, a kind of indefinite kind of a work from home, they're also calling people back to the offices because there are certain advantages versus disadvantages, but people are feeling that yes, advantage going to back to office are still more than a kind of what the productivity is they're getting. So productivity is one kind of a metrics. In nutshell, real estate is improving, and hopefully we will see a good next 2 quarters of this financial years. So that's from real estate. Over the panel discussion involved, then we'll share more thoughts on that. That's my take.
Thank you, sir. If any of the other panelists would like to share their thoughts on this.
Yeah, sure, Ravi. Alok here. So I think good afternoon, everyone. It's a privilege to be part of the panel. I think sharing it with Puneet, Raghu, Hitesh, and Tanisha, I hope we'll be able to bring in some added perspective to all the students over the next 60, 90 minutes. Now, this particular thing, I think great points added by Raghupati, Tanisha, and Hitesh. I would like to just add my perspective there that obviously the economic situation last year when this pandemic hit was not in a great shape. I think it was very, very tough time. And I'm sure in the corporate roles, all of us who are there, we were definitely, I think, in a situation whereby we came across a crisis which we have never even imagined. The overall economy obviously suddenly shrunk. It was negative, and all of a sudden, if everybody remembers 20th of March, around that date, all of a sudden the whole country was shut down, right? So I think from that situation, obviously that was a sort of black swan event, and we are looking at number of industries which really has been under a lot of stress even today. So industries like airline, hotel industry, services industry, some of the apparel industry, etc., etc. They found it very, very difficult, and many of them have shut shop as well. However, I think, like we say, it's adversities also brings opportunities to people, right? So some of the industries also found opportunities in the situation, and I was at that point of time with a IT hardware company, and the kind of demand that we saw for IT hardware and IT products and telecom, pharma companies, etc., was just above the roof. And many of the companies have clocked their highest ever sales and best ever profitability. So I think in that sense, there was an opportunity too. From a current situation perspective, I feel that most of the organizations have tried and made themselves leaner. There is costs which have been optimized. Today, compared to the pre-COVID levels, many of the organizations or most of the organizations are operating at a much more, with their cost structure optimized, and therefore they are in a better situation than what the pre-COVID levels. Demand is definitely back, and I think Raghupati was talking about the car demand, and Tanisha was talking about the cosmetic demand, and I can see that in the market as well. So I think demand is coming back. There is still some challenges because the supply chain worldwide has still not been fixed. So I think every car requires some hundreds of ICs, because today the car is as good as a running computer. So I think there is the supply chain on chip shortages, etc., are definitely holding back, and therefore there is still a lot of the fixing which has to be done. And therefore, if you order a car today, you don't get it before 6 months, 4 months, 12 months. So I think that challenge would be there. I am looking at probably a steep inflationary increase. I think there's a humongous, increase in commodity prices. The steel prices used to be about 35 rupees a kilo last October, last September, and they have shot up to more than 60 rupees and 70 rupees over a period of time. So I think if that's about cement, I think practically all commodity prices have been shooting up. And that's why whoever is interested in the stock market, you see the commodity-driven companies doing very well, because they are wiping off their loans and they're making huge profits as well. And I'm sure that would add to the cost structure of number of companies, including Hitesh's company. Maybe while the construction and real estate companies, you would see that the average cost has really gone up. So I'm seeing that inflationary trend definitely active in the market, and we may come across some steep inflation in that time to come. The other thing which I'm seeing is liquidity. I think the reason why we see across the board, a factor which is really there is adequate and too much of liquidity in the market. So I think across not only just India, worldwide, the liquidity is not an issue. So sometimes, and I'm right now connected with the startup ecosystem, some of the startups are getting insane valuations. I mean, the valuations that they haven't seen ever, or even the founders could ever imagine, right? One of the startup which was valued in June around 450 million, 3 months later they're raising a new round, and I'm connected with them, and right now they're already valued at 1.5 billion. So I think that's the kind of value investors are willing to pay. Liquidity is not a problem. The Chinese sentiment, the anti-Chinese sentiment, is helping India as well. So all in all put together, when I look at it around, certainly demand is coming back. Cash is not a problem. The consumption is there. So if the third wave does not hit, if the things are still, if there is no disruption, what happened last year, when we were doing very well, and, at JCB, we sold in January, February, March, we sold the best quarter in 41 years. I think so that talks about the infrastructure story as well. So therefore, I think the demand is there, the cash is there, all the right sentiments are there in the economy. Now, let's keep the fingers crossed. If the third wave does not hit us and things doesn't slow down, we should be looking at a good period in time to come.
To supplement Alok, actually, I do meet lenders like bankers more often, kind of, quite a few. So what nowadays, as the cash are more, the banks have not done any lending, not much lending, if I say, in the first half. So now they are under pressure to lend.
Right.
So what they are telling, the most of them are telling me, आपके पास कोई अच्छे ऐसे हैं तो बताइए, हम देने को तैयार हैं. मतलब I will recommend them to some companies, kind of. So this is what is happening. It is too much cash with the banks. They are under pressure to lend to right people, but there are systems in place now. You just can't lend like that. So that's there.
My last, just one passing comment is about the Indian, but at the IMF economist Geeta Gopinath. She just released some data 2 days ago, and India is rated as the fastest growing economy in the time to come. It's about 8.5%. So I think that's another positive indicator. Yeah.
Sure.
To add to, thanks Alok and thanks Raghupati. I'll just add one point here. I think most of the point has already been covered. So before that, welcome. I'm Kashipur. I think it's a privilege to interact with so many students here. Good afternoon. In this particular phrase, I have just one thing, that this COVID, although now the sentiments are positive, but last 1.5 years has been really, really very painful for the organizations, for some sectors. And I think as a finance professional, that's my advice, that being whichever space, whichever vertical you are in, the financial health of an organization, whether you're able to survive these kind of situations for a year and a half is very important. And that's we should always be looking at, especially with the example I can quote is Big Bazaar. The Big Bazaar, there has been overly invested in acquiring so many things. And when COVID unexpectedly hit them, the financial health was not even allowing them to sustain for a 2 to 3 months kind of a time frame. So there are ups and downs for these kind of situations comes up, but then the learning we can take from this kind of a situations, that we have to maintain our financial health at a particular level, that if something unexpected comes to us, we should be able to sail through and get the fruit that is waiting a year ahead from us from that situation. So that's my advice. And thanks Alok and Raghupati for your comments.
Thank you, Puneet, sir. Thank you all. Thank you for helping us understand the current economic conditions better by stating relevant facts and figures, and also letting us know about the current demand in the economy, which was indeed very informative for all of us. Moving on, Alok sir talked about the Black Swan events. I would like to take a question on that. As finance professionals, the recent Black Swan event was definitely one of the biggest risks that you must have faced. Starkly different from anything you must have ever faced. There must have been a plethora of occasions where you would have faced challenging situations. We would like to know, how did you face this risk, and how did the risk management happen? Alok sir, if you would like to take this question.
Sure, I can start, and then probably my fellow panelists can pitch in as well. So I think, yes, as I mentioned, I think last year was probably the toughest period in personal as well as corporate times that we have all been, and I'm sure for every individual. From a business standpoint, I think when that event happened, and I would like to jog everyone's memory, around that 20th of March event, etc. Suddenly the lockdown happened, and nobody had seen this kind of an event. So I think people were caught on a wrong foot, and we had no idea what to do around it. Now you have very knowledgeable people like agencies and consultants like BCG and Bain Capital and all of these coming out with their own reports, and which talked about the doomsday, right? Things will be falling apart, it would be gone, and this and that, and nobody had a clue what to do in that. Whether to order for products, whether to manufacture, whether to the stores are already closed, whether to retain the people. How much of cost structure can you retain as well? So I think in the spirit of risk management, what I would like to share is what we did, and maybe others can chip in as well. I think our challenge was, and I'm sure many of others, I would echo the sentiment of others as well, which is around our challenge was, how to keep the sales team motivated, which means, if the shops are closed, if nothing is selling, if people are not buying, suddenly the mood and motivation of salespeople and their targets were there, and suddenly everyone's shoulders were dropping, right? So one challenge was how to keep the sales team motivated. How do you still keep them focused? Because they were looking up to the leadership team, and we as, different functional as well as collective leadership team, we were saying, how do we run the business and in this scenario? Second is about what do we do about cost? If the sales are not coming, what do we do? Should we start, looking at reducing cost? Can we afford something? Can we not afford something? That was another cost, was another challenge. Third was about cash. So I think while the biggest challenge was we normally, when the business is running, you don't worry about the cash. But at that point of time, I think while we had given credit, and we had given we had sold the products, we were not sure whether the money would come back. And people were already indicating, and dealers were already telling us, look, we can't pay you right now because I can't get my money from the market, right? So I think you can't get the money, right? So these were the big challenges. And next 3, 6, 12 months, what do we do around it? We had no clue. So, and there was speculation around recoveries, like somebody was saying, oh, can India do a V-shaped recovery? Vaccination will happen, not happen. Will there be a U-shaped recovery? There will be a L-shaped recovery. Vaccines would be effective, not effective. So there was clearly no clue around it. So what we did is we engaged, and I'm sure many of my fellow panelists would have done, is we engaged in a scenario planning. So we did business scenarios saying, look at scenarios which are optimistic, worst case scenario, or realistic scenario. So for the entire business, we all sat down together and we said, okay, whatever the situation is, let's put our head together, make some assumptions, and say what the business is going to look like for the next 3 months, 6 months, 12 months. What happens if the market opens up in about 30 days, 60 days, 90 days? And if that is the situation, how the business is going to be there, then, what is the worst case scenario that can happen? What is the best case scenario that can happen? What it did was that, that kind of a scenario building and taking some assumptions, first of all, brought the entire team together on the same business understanding that this is what we are going to do, this is what we are not going to do. A second is I think we started taking the necessary actions according to it, which resulted in the business, taking a conscious call on different war fronts, right? So I think it was like fighting a war, and that war room kind of an approach helped. So scenario planning is one thing. Whenever you deal with future uncertainties and future planning, I think scenario planning is a very important thing, which I think a lot of us have done it in the past, but this time the kind of rigor and the kind of value that came through it, I think it's something that it can't underpin it. The other thing which we did was customer engagement. So I think the customers who were very nervous, who were loaded with inventory, etc. Sir, hum kya karenge? Is my money stuck, etc. We engage with them proactively across India, and dealers and everybody else, and try to work together with them to try and tide over the situation, managing their inventory, working together on the cash flows, etc., and still trying to give them the comfort that things are not over. It may be delayed for a few months, but I think things will be back. So, and which really happened later, right? And the last thing which we did, and very important, was the employee engagement. I think all of us were used to, before the pandemic, of having physical, in meeting room meetings and seeing face-to-face meeting, etc. And the moment that started fading away, the employees spending time online, etc., it was becoming too stressful. Keeping them engaged, keeping them, still in good health and good mental health. I think that was very, very important. So these are the things that we did. And that's the way, I think, keeping the morale and motivation of employees, our partners, high. And that led to also the financial prudence and planning that helped us tide over it. So that's something that, from my side, I would open it up for other fellow panelists to add.
Yeah, I would like to add, Alok, very well said. So if I just say the same thing, we also at MagicBricks went through that. So if I just summarize what you put, so there are different choices each organization made during this period. So first choice is revenue versus safety. whether we should focus on revenue during the COVID period or we should look at safety of the employees. Is that calling employees back to office important? Or if I'm not calling them, how the revenue will be? Because one part of our revenue comes from the call center. So that's the biggest decision during that period, whether should I continue operating call center. If I move my outbound call center to home, the productivity will not come. So that's a conscious call, whether I should send my sales team member on the ground, because majority of my sales also come from my field working on the ground. So that's a call we need to take, and the conscious call that yes, we will go with the safety. Another thing is, rightly you said about the cost optimization. The first challenge comes in whether we should go for a get leaner mode or remain loyal, because there are people in the department or the organization who are as old as organization. So when you do a cost optimization, everybody gets into that packet. Another question we ask is the corporate governance still relevant during the pandemic period? Because there are certain compliances that ones need to be done. You have to do that compliances. So all that call needs to be done. Another is important thing, which definitely we will going to discuss, is the shareholder values versus social responsibility. Whether we should focus only on the profits or have some social responsibility towards. Most of the organization during this COVID period have done kind of extended support to employees, also to their vendors. At our company, we not only vaccinated our employees, but our key clients also. So we extended all that program. Many of the organizations have increased this thing. Another important thing which Alok also touches, the compensation. The call needs to be taken whether executive pay needs to be reduced or workman pay needs to be reduced. A conscious call. And it's also scattered manner. Earlier with that if you want to reduce a manpower cost, which sometimes become a major chunk in your overall cost, whether you should reduce employee headcount or you should do a scattered kind of a reduction in the wages. At a conscious call we have taken, we will not cut down the headcount on the first instance at org level. Highest from the CEO, he took a CXO position, took a largest hit of the cost, and then we also put a certain threshold limit. We will not cut compensation below this level. So all this cost all these choices we all made during this COVID pandemic, and each choice have a learning also, and also give us a kind of momentum or way forward for the next quarter or the next couple of months thinking that we will be operating. And there are certain new opportunities and the new ways of working comes in, which definitely helping us during this kind of I can say that post-COVID period, which bringing more efficiencies, more cost optimization. So I think it's a very well said.
I can add a little more on this. I think both my co-panelists Alok and Hitesh have said very relevant things. But if I were to simplify and just say, for students, 3 things that you need to remember probably. So it's a very new, unprecedented time. So no one was prepared for it. No amount of years of experience and no amount of qualification prepared you for this kind of a scenario. So it was very new. People had to think very differently. And it was a war for survival. So we actually thought of 3 things, which is very key. One is financials, undoubtedly. So sales and cash more than profit. Second is people, which is our employees, our partners, our customers. How are we going to help them, impact them, and make them stay afloat, right? And the third comes solidarity, which is how do you impact the communities and the countries that you are in, right? So I think these 3 were the pillars during these crisis times. And in terms of the way we handled with sales and cash, of course, there was multiple scenario building, and it was just anybody's guess. As he said, it was L shape, V shape, W shape, U shape, and whether it will be a long U or short U. So it was many different scenarios, and it was just anybody's guess, right? And we initially, of course, like typical finance people or typical crisis management would, you try to overanalyze data and you try to over rely on various information that's coming in, and then you realized in a very short span of time, all this is not going to work. It is going to happen. Maybe it will be longer than expected, and we have to be prepared for it. And then we said, fine, we stick to 1 scenario or 2 scenarios and just go ahead with it and see how it happens. There was no point in building a new scenario every day or every second day. So that's one. And second is cash is king. That's the number 1 golden rule in cash is king. So it's very important to keep your cash cycle clean. But for cash, you need sales. Okay? Unless you're a very cash-rich company like L'Oreal, and honestly, we could survive a few months probably without cash, but that doesn't mean we sit on it, right? You still need to pay people, you still need to pay rent to all the housing sector and the reality sector, and you still need to stay afloat. So what we did is, like how this, as Alok said, which is the sales team, keeping them motivated. So first we put all people on training. Anyways, you can't go out, get on training, get upskilled, and the training was just not any general training. We actually overnight prepared a lot of digital upskilling training because we realized the way of selling in the future is going to be very different. And thankfully in L'Oreal, we already have a very diversified portfolio. We have 4 divisions coming from consumer, salon, luxury, and active cosmetics. So very diversified portfolio, and some of our divisions are already very high up there in terms of e-commerce and online selling practices. So we quickly had best practice sharing across divisions, and we said we need to upskill our people immediately. That's the only way to make them stay motivated, which is to say, yes, we are trying to do something very radically different, and this is how the company is helping me be prepared for it. So in a matter of less than 1 month or less than 15-20 days, we came up with multiple digital solutions as to how do we reach our products to the consumer. If you remember, during the pandemic, let's say, because we are in the cosmetics sector, so makeup is not considered as essential. Shampoo is, some of the skincare products are, but a large part of our portfolio was not considered essentials, and modern trade was practically shut. Right, so you had to go through the traditional trade, and the salons were shut. So very different model, a very different go-to-market, and we had to kind of transform it overnight, and we did it. We developed social commerce. We went on platforms like at lightning speed, and we also ensured that our base trade is supported by enough credit to the extent where we could help them, right? Because we were a cash-rich organization, and that really helped us. But that didn't mean we actually went and overspent. What this whole pandemic did is actually it pressed a restart or a kind of a revise button in the cycle of any company, which is never waste a good crisis. So every company, irrespective of the sector, country, has gone back and re-looked at, in the new scenario, how do I want to run my business? What is the structure for the future? How should our teams be working together? And surprisingly, I would say the teams really kind of blew our mind. We thought remote working would be difficult, but every person and every team came up much stronger than expected. We never thought our teams could work so beautifully well remotely. The silos in any organization which were there were broken just like that. Information sharing to collaboration was one of the best ever seen in many, many years. Not just in L'Oreal, I think across all industries. I see Puneet nodding his head, so I'm sure across all industries we have seen. So, and that's why we very strongly believe that people are our greatest asset, and it's not just our employees. And we say people, it's our people, our partners, our customers, and our shareholders and stakeholders, right? So people are our greatest assets, and you need to protect them in every matter. So, like Hitesh said, a headcount, of course, that's one choice, but L'Oreal doesn't exercise that choice, not just in this crisis, in any crisis. We never give pink slips, we never do headcount cuts. It's always structural cost savings, and trust me, in every organization, there's enough and more opportunities to find loopholes and cut down the waste. And then, of course, the solidarity, which is how do we come out as an organization which is out there to help people at large, people who probably don't even buy your products, and still you want to help them at large. So solidarity campaigns run by a lot of organizations is something which really stood out. And each organization did what it could. For example, for us, we do cosmetics, so we do have some of our raw materials which can be converted into a sanitizer, right? And anyways, your products are not selling that much as before, so why waste it? Why waste your raw material which is just lying there? We did a lot of solidarity campaigns. We distributed sanitizers and, of course, a lot of other things. So overall, I think the way you're seen as a corporate citizen is also very critical, right? And that is what this pandemic has brought out. It's really shown who are the corporates which actually care for the countries and the people that they are doing.
Thank you, Tanisha, Alok, and Hitesh. I think I'll just add a few words with all these. What I have seen in this, as students are there, let me see the theory part of risk management is like this. There are 4 steps. You need to identify, you need to assess what kind of risks it is. Then you have to quantify what it is there, and then you have to mitigate it. These are the 4 steps of risk management. You all must have read this, what is risk management. But as the COVID has proved, this was one black swan event kind of thing. And you were just, there are no kind of historical or empirical data or the kind of situation that was there in. Let me give you a perspective. My group is headquartered at London, and we are present across 4 continents in 30 countries. And when all these things happened, we were frequently having con calls and VCs with across the continents and countries. But I shall say with pride that we Indians are the best at the time of VUCA. VUCA, you must be knowing, volatile, uncertainty, complex, ambiguous kind of a word. Because we have one thing which no other country have, that is called GMT, जुगाड़ मैनेजमेंट टेक्नोलॉजी. हमसे बेहतर और कोई नहीं है, मैं देखा हूं ये. जुगाड़ में हमसे बेहतर कोई भी नहीं. And we have proven that, and there will be millions of stories in India. You will find how through jugaad we have done that, because there is nothing in theory or past practices that has prepared us to face this kind of situation. I'll just give you one example. We had acquired a steel plant at Rourkela in Odisha. And at that, when this COVID situation happened, Odisha government has a rule of 14-day quarantine where whoever comes from the outside. And the plant was kind of mothballed for 3 years, and we have acquired it through IBC. So we have to get it repair and maintenance from the original equipment manufacturers. So the broiler and all the things, the engineers were Hyderabad, Bangalore, Surat kind of. So if they come and they will be quarantined for 14 days, they will not come. Now, why should they come and be at the hotel or at the guest house kind of? So what we did within our plant area was something 10 square kilometer kind of area was there. So we developed guest houses that were mothballed. So within 7 days, we developed that. We said that you come, you will be quarantined within the plant. So you can do your work. You don't have to be sitting idle at your guest house room. Na? So as far as the authorities are also concerned, they are not getting out of the plant. So they are quarantined. So like that we did, and they came and repair maintenance were done. So what normally happens in 6 months time, we did in 4 months time flat within the this period, COVID period only. So this is the kind of jugaad that you see, how you have to think on your feet at that point of time, relevant to what you are doing. And as all my co-panelists has said, all the basic things like cash and all, so that's a must. आपके पास पैसा नहीं रखेंगे, आगे कितने महीने होगा पता नहीं, आज भी नहीं पता. अभी now we are more clearer now. But at that point of time, we thought that next 2, 3 and all. I will also respond to what Alok was saying, the third wave. I think the third wave is a creation of some of the intelligentsia. Right. They were telling this since June that it will come from August. Now we are sitting at October. There is no scientific or medical evidence that any third wave is coming. Only it will be kind of state or event specific, kind of like Kerala is having 10,000 cases right now when the country is having 20,000 cases. Because they allowed, because of that, their festival month-long kind of that happens at all. So if you are kind of not doing the basic things, then only it will come. Otherwise, per se, no third wave is coming. This is what I call it. Is only an imagination of intelligentsia sorely gone wrong. So, and we are poised to manage the risk we have managed, and we are now at least 75% recovered. Rest 25%, I think in the next 2 quarters, we will be through. Thank you.
I think most of the other panelists is already covered. In the interest of time, I'll pass this through. Thank
you, Puneet, sir. Thank you so much, panelists, for sharing your experiences with us, which gave us an insight about the risks faced by the industry. Also, the initial dilemma between the revenue and employees' health, as stated by Hitesh, sir, and how engagement with customers and employees eventually help you mitigate these risks. Moving on, working in the finance department, there must have been a lot of changes with regards to staffing, people management, and teamwork. So what in particular CFOs and finance professionals have done, and how did you equip your departments and staff to handle the risks and remote work? Puneet, sir, if you could share your thoughts on this.
Thanks, Abhikant. So guys, this situation was very normal and not very normal. I think it was one of an instance which came just as a surprise to everybody. And just like finance, no other vertical was ever prepared that this COVID has come up, and now we have to prepare for this kind of a situation. The entire country was locked down for 21 days, then the lockdown extended to 70 days. Nobody ever expected that the plants will be shut. The sales, everybody will be sitting at office. There's a complete lockdown, no sale happening for 70 days. And it's a disaster for any organization. And this was a time when the entire organization was just looking at the finance professionals, how we'll be able to manage the financials, how we'll be able to get the funding, and what Tanisha also talked about, that cash is king. Just like the MNCs like Pepsi, Mars, they are cash-rich organizations, will not face such kind of issues. But for other organizations, there is a big risk out there, and the cash is really become very difficult for others to manage. Just giving an example, in PepsiCo, when I was at PepsiCo, our entire beverage industry, there's one franchisor, which is Varun Beverages. That's an Indian organization. And our 50% of the sales also happened in the month of March, April, May, and June. That's around this 3 months period. Because of that 3 months period, the 70 days, there's a complete lockdown and no sale was happening. Their sales dropped down from 50% to just 5% of for the full year sales. There's a huge cash crunch for that organization, and to sustain that, and there was a huge cash requirement to pay salaries to the employees, to pay real estate rentals and all those things. Now, Varun Beverages came to us, to PepsiCo, that please support us, please provide us, and come out, help us to survive, sail through this kind of a journey. We gave them some cash support for a temporary period of time, and we recovered when the situation normalized this year, and we were able to manage it. But imagine, because they had a good relationship with an organization like big MNCs like PepsiCo, they are able to sail through this kind of a journey. But there will be many other organizations who have actually failed through. We are talking about the big organizations, but for a smaller organization or an Indian kind of a setup, if you're not able to do any sale in 70 days, or the sale has dropped down dramatically in some segments, you are actually getting killed. For an example, PVR can be able to sail through for last 1 year, but for the local cinemas, it's just like a dead end for them. They have to shut down their business. They have to look out for other avenues to do their businesses, because there's completely no avenue in the last 1 year. 70 days lockdowns for some industries, but some industries, it's a 1 year lockdown for them. Nobody is going to the theaters to do that kind of a stuff. It's a very, very difficult situation. And I think no textbook, no learning will guide you how we'll able to manage that kind of a situation. It's only the flexible approach, and what Raghupati sir has just discussed, that the JMT, that's like a different jogars or something. You have to think, very creative thinking is required. And everybody was looking up to finance professional, what needs to be done. What we did in Pepsi and Mars, I can share you that. The first and the foremost, we felt that employees and their families and their medical emergency is the first most priority for us, beyond finance, beyond anything else. And we have to give them an assurance that the organization is behind you. You don't worry, sail through this period, be safe at home, do all kind of COVID protocols, and we will ensure you, whether it's a medical insurance for the entire family, or a doctor on call for them managing all those things, or a COVID task force where their family members or their other relatives also can consult when they they get into this kind of a disease. So that was the first most priority for us, that let's spend that money, let's build that kind of an infrastructure for the employees' health and safety. That's the first most priority and mantra. And I think most of the organization has learned during this last 1.5 year that it is very important to build that kind of an employee loyalty and that kind of an employee um, and I would say employee trust. Employees has never been looked up to the organizations so eagerly, just like they have been seen in this COVID times. So I think this is very most critical aspect which we are organizations should start thinking in this direction. Apart from that, I would say the second biggest challenge was how to continue the business. Just Tanisha said that there are certain commodities which are essentials and been allowed, but there are certain commodities which are not essential. How to deal differently or have diversify your portfolio to reach that products to the ultimate consumer so that you can at least survive your business. You can survive without sale for 3 months, 4 months, 5 months. Beyond that, you need to have that kind of a top line to have a healthy business for you. So very radical thinking has to be done. I think that diversified portfolio, diversified channels, diversified go-to market was very much required. The e-commerce boom was significantly high, and the organizations who were present in e-commerce have gained significantly high in last 1 year. The organizations who were only general trade specific or only into the wholesale specific, they have lost a lot. And I think that gives that diversification is very much important. Your agility is very much required, that you have to shift very quickly and diversify your portfolio where you can actually sell that product to the consumer. There were on-the-go vans that has come up. They were just roaming around to different societies, just telling them, you can't go out, we'll come to your house and give you the product. So that kind of a radical thinking was very much required, and we have to invest in that kind of a resource into the sales team so that they can actually they get all the tools and resources so that they can sell that product and reach that product to the final consumer. Apart from that, investment in all the sanitizers, masks, all the COVID protocols, making your office, factory, market, everything just COVID ready, and people can feel that kind of a confidence that now we are safe in this kind of working in this kind of a environment. Giving that kind of a sessions to them, doing regular testing. So I think all those things were very much required. Now this is something which we're investing on the employees and resources, on the tools and all those things. The second part was how to manage the other part of the thing, that where we can optimize our cost parameters, how we can optimize the cost parameters and give that kind of a profitability, although it's hit, but still if we can manage our PNL. So I think that cost optimization came into the picture. What we did, we critically evaluated and negotiated all the agreements, whether it's a real estate agreements, whether it's an agreement in QSR segment, whether agreement with the PVRs of the world or Domino's of the world, that since you are also hit, we are also hit, let's be in this journey together and let's share the losses equally with each other. Critically with the real estate, since if real estate is totally shut, you are saving on the electricity costs, you're saving on other all the costs in terms of sanitization or whatever cleaning you do in your office, you're not need to do. So please give us that money. So that critical negotiation on each and every aspect helped me some aspect of the cost parameter that got saved. And all in all, we were able to manage sales through that 3-4 months period. I would say standing strong with an employees and telling them that don't worry, organization is behind you, building on the loyalty, giving them all the I would say the COVID protocols, giving them medical assurances, giving them infrastructure at their place so they can work upon, has paid back to the organizations in the H2 of next year and H1 of this year, and the employees has bounced back really. This remote working was not easy, but if the employees was just thinking pre-COVID that it was just like that working from home, it's just a different way of saying that I'm on leave, but I want a working paid leave. Let's be a work from home. Now it's actually the employees have shown so much of a loyalty that they will work extra hours to support an organization and in this kind of a venture. And now it has become a new normal for most of the organization and most of the employees. So that mindset has got changed, and organizations has immensely benefited. To give you an example, in certain categories in Mars, pet food, I'm handling the pet food category. In H1, we have lost significantly because pet food as a segment, people were not very focusing upon, and it was not an essential also commodity. We pushed the government. We said it's an essential thing because dogs also need food, and why it's not an essential one. We won that battle. what we realized in the last in H2 of last year, that when people were working remotely, this category boomed and exploded like anything. People needed a companion because they were alone. There was no social gathering happening. They want a pet where they can feel a companionship. They can enjoy and spend some time with a pet. Our category, you can't believe, in last 1.5 years has doubled its size, and it has doubled. It has become now close to $500 million dollar kind of the category, and it has exploded significantly high. Mars as an organization has grown. They have doubled their business in last 1.5 years. Now, to manage this kind of a growth, if you have invested in an associate or in an employees, they will obviously help you back, thinking very radical, thinking that how we can have an extra production in a factory, or how we can get the products from different thing and deliver that kind of a demand scenario to the final consumers. So that's all I would say. You have to win the employees' loyalty. You have to be with an employees. That's the first most mantra. You have to have a radical thinking in terms of how we can do the business as usual, and then take one step at a time, because every time the fortune will not be in your favor. What you have learned in this kind of a scenario might not be right for any other kind of a scenario. So you have to balance your approach in each and every situation like this. Um, so that's all from my side. I would say there is we can learn from it, but whenever a new situation comes up, it will bounce back, and it will require a very different radical thinking, and none of these parameters might help you in that situation. So you have to be very flexible enough and have that kind of a JMT which Raghupati has told you. That kind of a mindset is very much required, which you have to sail through this kind of a radically changing environment.
Thank you, Puneet. Hitesh or Alok or Tanisha, if you want. Right.
Adding a few points, just adding a few points in terms of employees and people management. Some of the things which I think we clearly experience is, one is being tough times. I think the hirings were completely stopped. There was no salary increases to limit the cost for everybody from top to bottom, but I think there were no cuts as well. So I think in that sense, that was the best you can do. There was an online engagement. We were used to few meetings here and there, but I think the online engagement models evolved in a very short time. We did our first sales conference online. I mean, the sales team, the dealers who were used to going for dealers meet outside India, suddenly they all were okay in terms of doing the dealers meet online like this. Who could have imagined that for IIM, we would be doing a session like this with everyone online here, right? So I think these are all coming from.
Instead of Bangkok and Pattaya.
Yeah. Then I think in terms of, I think after a while, we realized that the mental well-being for employees and people is extremely important. And therefore, keeping them initially for first 2 months, I remember for myself, we were like hooked on and glued on to the screen for almost 14 to 16 hours. Not just the normal business, but there is, COVID challenges, crisis management, cash management. So this online exposure for 14, 16 hours was really becoming a health issue for many people as well. And therefore, we started no meeting. So basically, after 5, no meeting time, right? I mean, so people cannot, as leaders, we decided that we will not slot any meetings with our employees after 5. And, there were breaks in between different meetings. We started yoga and meditation sessions. So I think some of the yoga and meditation sessions, we did it online, and we did it for employees and their families as well. So I think they can do it there. We revalidated all the insurance policies as well for people, so that, the employee group insurance policies also, in case of a worst case scenario of people going through medical condition, they have adequate coverage. So some of these measures, I think it just reinforced during that time when people were going through so much of a mental, I would say, challenging situation. I think some of these measures as an organization, as a business, helped us in terms of driving that togetherness, driving that sense of employee belongingness to the organizations. And as Puneet rightly said, if you help the employees in the tough times, they help you and their loyalty towards the organization increases.
Just to add, on the customer side also, most of the companies like us also, we have given certain free kind of a subscription period, because consumers are not getting, our clients are not getting a response during that period, the core COVID period. So initially we have given 3 months, 3 weeks of subscription free. Then we extended it to another 6 weeks. So one thing, that cash flow is getting impacted because the consumer is not renewing the subscription. They are getting an extended subscription. Pressure is coming on the cash flow. Then we reach out to vendors. At that time, we never delayed any payment. We put a case along with that, agreed the timelines, and then do a matching of cash flow versus that, and then honor the commitment. Plus employee engagement activities like your the consultation with psychiatrist or person feeling a kind of a depression or all that, because there's a lot of turmoils or a kind of loss happens in the family itself. So the close relative is going, close family member is going. So all that, the company is with them during that period. Might be it's a digitally connected, but yes, everybody is connected through a one common platform where they share their views. There is a kind of a one mentor associated, or kind of a hand-holding of a particular person who is during COVID period. We provide medicine, all that support, what they require, even the food also being provided by employees. So all the new kind of never thought of kind of things comes into place where everybody gets connected. And it's a quite a good feeling when a kind of a bonding represent that, yes, we are a part of one family. So that's a few of the things we have done also.
Vikrant, you could take over. I think we have another 19 minutes and another 4 questions. So request panelists to a little brief on these, because then only we can cover all the 7 questions.
Definitely, sir. No issues. I would like to move on.
Just like
sorry.
another suggestion, that I would be very keen to listen to the questions from the, and I'm looking forward to
definitely,
that.
sir. We have specifically allotted a specific
what
time
we
for
want
that.
to say, it's what the students want to hear. So we might as well ask them to start
Some of
posting
these
their
questions we can just cut it short, and we can just move on to their question.
We have additional time allotted for that particular segment. The students will be asking questions from you. Anyway, we'll just go on with the current flow of questions, and we'll have the question and answer at the end. Thank you, everyone. Working and managing teams, gaining employee loyalty and trust is never an easy nut to crack. And after hearing your words, we were able to understand the different dynamics that finance professionals need to handle and deal with. Bhavna?
Absolutely, Abhikant. It is no longer news that the current events have reshaped the risks and redefined several existing risks and processes. The current crisis has significantly accelerated the need for financial institutions to adopt innovative technologies. Indeed, customers had no choice during the lockdown but to migrate to a digital-only world. My question to the panel is, how can technology and automation enhance risk management's capacity, capabilities, and efficiency? We'd like insights on anything particular that your organization may have done to enable digital transformation. Mr. Hitesh, if you could throw some light on this.
Sure. I will keep this very short. So yes, digitalization has given a lot of opportunity. They have also supported a risk management very well. So one, the digitalization help in providing a single source of truth for a risk management. Earlier, what happened that there are different departments, they need to correlate their response to a risk management. But once a digitalization comes in, everything can get some centralized. With the digitalization also, we can enhance control enforcement and monitoring. For example, in our case also, we have digitalized a complete ERM framework where there are certain set of questions come to each department, then the employee fill a particular questionnaire about that. They did a certain sampling of that, and it goes to a senior level. So digitalization also help in enhancing the control. Also, one thing that's helped because of the impact of digitalization risk management is it also enable dynamic risk reporting. Means you have a different tools, Tableau, your Click, all these tools can also integrated with your risk management portal and can give you quick reporting. Applying a proactive approach to a different risk associated with your vendor management and the customer also. Plus, the digitalization also support other types of risk, which not only generated through risk management to a particular technology also. So all these things enable a quicker turnaround of risk management. As far as MagicBricks is concerned, we have done a couple of improvements in terms of automation. What we have done, we are early adoption of technology at MagicBricks. So we have worked on human to machine integration. What I mean to say that we have enabled certain processes in our different domains where the machine is interacted with the human. One example is we enabled a chatbot in our the help desk. So whenever a person moving to a help desk, they discuss their queries with the chat, and this AI tool helps in filtering of a particular complaint going to the right segment. Plus, we have done smart process automation. Earlier, my editors used to transcribe each data. Now we are using voice to text technology, which is give close to 80 to 85% of accurate result. Plus, advanced analytics we have also implemented. So there are different buckets. So we evaluated different digitalization opportunities during pandemic also. So we have evaluated our operations part, customer services, sales, marketing, logistic, IT function, financial management, our product, our HR management, procurement. And as far as the bucketing is concerned, we have done a kind of, we have implemented Salesforce in this COVID pandemic period only, where we completely kind of remove all our paperwork and move everything, my order form, order management, service activation, your order processing, your all system integration between SAP and the Salesforce digitally during the COVID period. We have also upgraded our SAP to HANA, which is the latest version of SAP available during this period. So seeing that, yes, the lot of scope is still there. So I can confidently say that we have covered a first phase of digital automation. We have a digital ambition to move more towards artificial intelligence, blockchain, and RPA. RPA also has been roadmap has been defined in the charter of our journey in the next 2 years. As of now, currently we have chatbots working, we have a data lakes working, we have predictive analysis. So the next process would be RPA integration of external data. Means when I say external data is through vendors, customer to our portal. Then the next phase will be artificial intelligence, machine learning, and then the last would be NLP. Some bit of NLP we are using in our editorial bit. But most of these digital opportunities and things which I talk about, blockchain, artificial intelligence, NLP, chatbots, we have implemented in the last 2 years during the COVID period, understanding that, yes, this is giving me the right advantage. So I've kept this short. Maybe anybody can add what their experience to digital journey and risk management was.
Very well captured, Hitesh. I'll also keep it very short, guys. This fintech space, COVID has accelerated really, really fast. And I would urge that as a finance professional, I think it also demands a lot of skill set upgradation for everybody, each one of us. Till now, we have been working in terms of Microsoft Excel worlds and PPTs of the world, but now everything is getting changed. And I think 5-10 years from now, you might be thinking that organization is working with no Excel, no Word, no PPT, everything is digitalized. Right now, the journey started with the output form of Power BI, or there's a Tableau where you can have an output seeing that all the PPTs and everything is being replaced with that. Now it's a robotic automation, artificial intelligence, Ultrix, everything is coming up so rapidly that it is replacing everything. You just have to build the logics. You have to need to understand this entire tool. So I think that upgradation is very much required. So along with this, if you want to make a career in a finance, I think this skill set is very much required. Organizations nowadays, earlier organizations were outsourcing the entire controls work to the different BPOs, which is like IBM and Genpex of the world. But now they're also outsourcing the entire analytical work also, because they realized that this is also can be automated. It was earlier in other verticals, but now in finance also, everything is getting automated. PepsiCo has built up their largest vertical in Hyderabad. There's one GPC cell, they will call it. And this is the largest one across the world where this kind of an automation work happens. And they have shifted all their planning resources also to that cell to learn, upgrade their skills, and work on this kind of an automation. So that's how organizations are investing in. Some organizations is quite far and they're investing today. Some organization will learn and they will start investing in 2 to 3 years from now. So start upgrading your skills on this particular space. This is a very hot topic in terms of the fintech space. Thank you.
All right.
Yeah, we can't.
Yes, sir.
Please.
Yes, sir. So we'd like to skip on to the last question then. On a final note, we would like to know your opinion on whether the current crisis has tied it down, if hiring is picking up, and the future of the current graduating class. On that note, I would like to ask, what advice do you have for the students currently pursuing their MBA? What are the particular segments the students can work on and the skills they need to possess to overcome risks in the future? Tanisha, ma'am, if you would want to share your thoughts on this.
I think Puneet just summed it up in the previous question in a way. And pretty much that is it. Come with an open mind. Digital is big, it's huge. And what we say digital, it's quite an open area. It's a very big area because digital also means e-commerce, social commerce, it means analytics, it means machine learning, AI. There's a lot of things inside. So, and of course, in the B school, you'll just be able to touch upon the theory, probably you'll do some projects, it will be very different. So when you enter the industry, try and pick and choose industries which can give you exposure in these areas. And not necessarily it's only a fintech organization that can do that. A lot of other traditional industries are also going through this transformation. Look at startups, look at some very old industries which are going through this transformation. You can think about your perspective as a young consumer. So I have always seen what really helps is when you correlate yourself to the consumer. So that whole consumer centricity and the consumer user experience is very critical. So when you think of any product or service as a consumer and how it's going to play out in their hands or in their mind, that is what really makes a huge difference. So that's my only advice to you. Come with an open mind. Yes, hiring has started, so good news for all of you. Hiring has restarted, but as some of my co-panelists said, it's still cautious. I wouldn't say people are going berserk and going and hiring left, right, and center. It's very cautious, but what I would say is, when we entered the industry, the kind of roles we got into in the initial few years of our career versus what you're going to get into, there's a huge difference. So there's a large bit of trust which is there on young talent. We no longer believe that you need to have 15, 20 years of experience to actually do something radically different. So we think the young minds ask the right questions. They bring about a lot of value on the table as the Gen Z or the millennials. And this is what we are really looking forward to.
Yeah, if I could add with what Tanisha had said, there are 4 things I will dwell upon. Number 1 is that the worst days are over. And we are on the course of getting into normal and growth. Normal and growth in the next 6 months, 2 quarters normalcy, and then growth, and that growth will be excellent growth. Number 2, what should the students do? I believe, Bhavna, that we are all finance professionals here, or all kind of majors students are there?
So we have all kinds of students.
All kind of students are there. So you see, and I believe that most of you will be placed in different companies and mostly into corporate work and all. So my advice to all students, as all kind of branches of studies you are there, in any corporate, your degree is just an entry ticket. You get into the hall, then you need to perform there, right? After 5 years, nobody will ask you what percentage of mark you obtained, which college you were in. It's irrelevant. After 5 years of your corporate life, it's only what you have done in the last 5 years that will be only be counted. So, and if you see in a corporate life from my more than 2 decades of experience, I could say that there are only 2% people in the corporates who does all the hard work, smart works, and they are dedicated to the company. Only 2% people I have seen. So the competition is zero there. If you dedicate yourself to your work, you be eager to take more work, do all your work, and as you will understand in years to come, for getting a promotion where you are placed and you want to get into the next level, when you are remaining at this level, you have to demonstrate that you are eligible for and you are capable of doing the things of the next level. Then only you can go to the next level. That's how it happens. So hard work, smart work, dedication is the key to go. There are other methods like buttering, oiling, all these kind of methods are there. People also thrive on that. We all have seen that. But that's not a sustainable thing. The only sustainable thing is your dedication and your positive attitude. Believe in yourself. आप अगर अपने आप में नहीं भरोसा करोगे तो कोई और कौन करेगा? आपको अगर कोई बड़ा काम मिल रहा है, नहीं मिल रहा है तो आप मांगिए. You ask for it. You ask for, look for avenues that you can add value. Don't wait for an invitation. And be dedicated to your organization where you are working. And this is only 2% people does this. So you have no competition there. And believe me, the management understands and appreciates your work. Do not go unnoticed. People at a higher level of position are there because they have something more than you. That's why they are at this position. So don't think that they are fool. They understand. It will not go unnoticed. That's my advice. Thank you.
I'll just add to two things. Short one. I think one of the character which is needed in today's world is learning, and learning, right? So I think keep that learning attitude, keep your mind open. There are many organizations which used to exist, and I've been part of at least one of them, which was an iconic brand, and many of them have vanished in 2 to 3 years' time. If you open the newspapers today, you don't read about old iconic companies like Hindustan Lever or what Bata did or what some of these iconic companies have done. What you read today and the newspaper and Economic Times every morning is full of companies which are becoming new unicorns who are really challenging what has been happening for last 20 years, 30 years, 10 years. And these, even the current big brands and names, I think they are now reinventing themselves. So my one advice to all of you budding talents and future of this country, I think learning is the biggest single word, not only for you all, but all of us as well who have spent a significant amount of time across. Unlearning for us, it's about unlearning and learning. For you guys, it's about learning. Second is digitization, as Tanisha said. I think digitization is big. And there is every aspect of business and a personal life, which is getting, the amount of time we spend on mobile is insane, right? I mean, sometimes I tell my kids, get off the phone, right? So I think the digitization bit is really very big. And, I think when the companies are operating, they're looking at productivity, how you can do the same thing better and better. And, just to give you a few examples, I mean, JCB, if I look at it, every machine there are about 200,000 machines across the country. And there is a chip inside which is monitoring how much each machine or how much our average utilization of this machine is happening. And I had, in my office, I think the CEO and myself, we used to get messages from the Office of Road Ministry, which would be asking, saying, hey, do you guys know how much of road infrastructure or utilization of these machines is happening, which is giving us it. So I think 200,000 machines, remote parts of the country, and you can still monitor the data, how much they are getting. If you're not getting used, which means clearly the road construction, etc., is not happening. I'll give you another example of retail, for example, in the Nike store. There are cameras whereby centrally we would every day and every week we would monitor what is selling and not selling in about 400 stores across the country, and which wall a customer walks to. Which wall does he walks to? The wall where shoes are there, or where there is apparel which is there. So which part of it you can see more footfalls from the customer's point of view, and that would kind of lead to a decision around the consumer behavior and what we then future order in the future season. So I think the data and the technology in all parts of life would be disruptive, and keep an eye on that. So I think learning is extremely important.
I would like to add, rightly said, Alok, for us, it's learn, unlearn, learn. For you, the young blood, it's learn, learn, learn. Okay, rightly put. I would like to just keep what Tanisha said, digitalization. For me, blockchain would be the next in. Why? The 1990, when the internet was launched, okay, it has the same potential which internet has in 1990. So we are just at the tip of the iceberg kind of as of now blockchain. And in the going next 10, 15 years, it will radically change the way we look at the things, be it your accounts, be it your agreements, be it your financial transaction. So definitely you should, even whatever the stream you would be, it's good to know what's happening in another stream. So for us, for example, I am happy to look at the digital front of blockchain, AI, ML. But there is a guy who is working on, say, in these technology. For them, it's good to learn about digital marketing or maybe a fintech space. They need to look at that. So get a knowledge of all these, the new technologies happening. It will definitely give you edge over other person to interact with some expert. For example, if I need to do some SAP implementation or Salesforce implementation integration, when I talk to a tech developer, I can easily translate what I actually mean. I do not need a kind of a mediator to convert my language to which he understands. So definitely look for some kind of module or some kind of capsule courses, which will give you a kind of edge in terms of a different competitors standing in an interview and talking to the interview. So all the best, young guys. I really like that. Learn, learn, learn. It's keep that mantra. Yes, sir.
Hitesh, when Rahim was introducing you, he told that you are an 18-year-old chartered accountant. So you are young. And you are also a hacker. He told that.
Yes. From started.
No, ethical or non-ethical, you are a hacker also.
Yeah, I started with ethical hacking, then a couple of courses I did in this. But
so you are
yes,
an
there's
18-year-old. Young.
There is. Thank you, sir.
Thank you so much, sir. I would like to thank all the panelists. I'm sure that every one of us will try to incorporate your advice and work on our skills to handle and deal the situation in the future in a better manner. The whole discussion was really insightful, and I'm sure the students must have gained a lot from this. Now, I believe, Rahim, this is the time for the students to be given opportunity to come up with questions for the panelists. So,
yes, Abhikant. Students can now raise their hand and can pose their questions based on the discussion conducted.
To specific panelist or as generally, whatever, up to you. Choice is yours.
So it depends on the panelist. If they want to add anything, they can.
Sure.
Yes, Parth.
Good evening to all of you. My question is to Hitesh sir, as he comes from a real estate industry. When the first wave of COVID hit, the stock market liquidity from the stock market was getting fetched out. At that time, how the investment instruments like REIT and investment infrastructure fund had kept the real estate floated, or what was the contribution of those tools into the real estate?
Okay, so the REIT so REIT is a bigger one, and then there is a kind of prop share where you buy a particular stock of that thing. So these startups started coming in, and it's given good opportunity to individual to buy a larger ticket size deals. Definitely, when the liquidity is going, the people are not ready to invest in a larger ticket size, but REIT or your prop share kind of a smart instruments give you an opportunity to get in that. And definitely these are being regulated. One, REIT is being regulated, but the prop share it's not kind of, again, the prop share also have a different kind of, one is governed by, whereas 50 lakhs of kind of minimum investment is governed by SEBI. but there are other instruments available in the market which are not governed by. You can also invest 5 lakh. Prop Stack also did a similar kind of services. To answer your question, yes, even though liquidity is going, the REIT gets into that because it's offer you a better ROI versus the traditional instrument, or a kind of a equity also give you that kind of an edge. Apparently, equity outperform these REIT instruments, but REIT also have better edge towards traditional like fixed deposits or a kind of your debt-based instruments. So yes, these grown over a period of time and do contributed a kind of holding into this scenario.
Thank you, sir.
Bitanesh, you can go ahead.
Hello, everyone. So my question is to all the panelists, actually.
We have lost him.
I think Bitanesh is facing some problem. Meanwhile, Siddhant, you can pose your question.
Yeah, I'm not audible.
Yes, Bitanesh, you're audible now.
Yeah, thank you. So my question is to all the panelists, and it's more about every major company is shifting towards ESG and sustainability and net carbon zero future. So I would like to understand from a profitability perspective, what is the mentality of a company? What is the mentality of a CFO or a leading individual in terms of that? When you are implementing ESG, sustainability, and we are talking about net carbon zero, so how is it being decided and how is it being incorporated into the company system when it comes to profitability specifically?
I would like to take that question, and then of course the panelists can add on. Great question, and it's a very hot topic along with digital, because sustainability and saving our planet Earth is one of the key priorities across the world, across all companies, because it's no longer that only profit can keep you alive. You have to be alive first. You need your planet alive, right? So that's why it's very important. And companies do take it seriously. As corporate citizens, as we say, it's quite a key focus area, at least in L'Oreal, and I'm sure in across all the other companies as well, right? So there is this vertical, so some of these organizations have already got a separate vertical for sustainability for the future. So L'Oreal has a program called L'Oreal for the Future, which is focusing, and I think everyone's focusing on water, plastic, and let's say they pick up one area on the planet and try and work on it, right? Whatever area is relevant to them where they can have a substantial impact, right? So let's say some pick up local diversity, some pick up the overall plant and the environment, and some pick up climate, right? But across all industries, I think there is a key focus. And of course, what is the impact of it on profit? I think it's a misconception that sustainability means profit erosion. It doesn't mean profit erosion. Okay. Today, of course, one of the key areas is plastic, and the substitute to plastic is not available at mass, because plastic has entered our lives in so many ways that we don't have a substitute for it immediately available, right? So, for example, when you still buy grocery in a large scale in India, and I'm not talking about urban population here, we may still choose to go for an eco-friendly or a vegan or some other product, but let's say in the remote villages, most of the products which are delivered to them are still in a plastic covering, right? And it's not just about the companies who need to work on it. You need sustainable solutions for the future, which is still a long drawn activity. But let's say water conservation is not so expensive. It's very, very profitable, economical, and companies can easily achieve it. It's largely got to do with transformation of their production facilities and processes. Solar energy is very economical. For a company which is huge, solar energy is not something which is undoable. So it's a misconception that sustainability comes at a cost. So sustainability, when you look at it in terms of long term, it is very economical, very profitable. But what you need to do is where you have to make choices, which are the areas that you want to really work on, which are the areas where the company and the organization truly believes it can create an impact. right? And then there comes a part of it, which is finance. Let's say sustainability finance is a very separate vertical. The way we used to look at P&Ls traditionally is going to change in the future. Okay, so now there is this whole digital revolution which is happening right now. Everyone's talking about e-com numbers, online P&Ls, a lot of other KPIs which are surrounding the online platforms. But let's say very soon in the next decade or so, people are going to talk about sustainability P&Ls. They are going to talk about sustainability KPIs because our planet is really, really eroding, right? So there is a separate vertical. It's a very new subject. It's a very evolving subject. But I think as of now, people are still first focusing on actions and then probably move into finance and P&Ls and all of that. But this is what I would like to say to sum up. Sustainability doesn't really come at a significant cost when you look at it from a long-term point of view.
Also pitch in there. I think it's definitely a topic on which awareness is growing and the corporates are paying attention to it as well. Hitesh, I think there are two things. Having worked with IT hardware company, I think there are some such kind of sustainability measures which are not a choice. It comes by way of the government regulations. So I think each of the companies, they are building up as part of their overall plan the necessary, for example, the IT hardware companies, the e-waste collection is a target, right? I mean, so every year we have a certain e-waste as a target, and that's non-negotiable. We do that. At the operating level, I completely go with what Tanisha said, that sometimes, as the time goes by, some of the, zero emission solutions are becoming, more and more, affordable. So for example, I mean, solar energy, more and more manufacturing units are slowly, gradually moving away from traditional, electricity consumption. And more plants today. Now, 2 years ago or 5 years ago, given the cost per unit, it was not economical to have solar panels everywhere. But now it's slowly getting there, whereby people are moving towards solar panels, and large manufacturing units are installing solar panels for their electricity and consumption. So I think in that sense, I think there is a journey which is getting covered, and some of this is P&L positive as well. So I think some of this is not a choice, and some of this is P&L positive, which will become P&L positive over a period of time from a profitability point of view. So this is a journey that we all have to cover over a period of time.
Very well said, Alok, and very well, Tanisha. I think, Bitnesh, my point will be that this also comes with a corporate reputation. Sometimes, what Alok also said, it's not a choice for a corporate whether to choose it, whether it is beneficial for me or not, whether I should go for it or not go for it. It's you have to, if you are working in a particular country, you have to abide by these kind of things. So that's very much important. At the same time, I think that builds the corporate reputation. Bitnesh, sometimes you can link it somewhere like a marketing activity, where if you more and more into sustainability agenda, that agenda will give you not a direct benefits, but an indirect benefits in multiple ways for a long term. The organizations who are more sustainable and who support this kind of an agenda gets multiple supports from the government in multiple fronts. Especially when I worked with Pepsi and Mars, with the sustainability agenda, we have been immensely benefited when we start up any greenfield project or any brownfield project in terms of an incentives, and the government also supports you in multiple ways. So right now, I would say if you're talking about the profitability, at pace, it comes back to you in multiple different ways. You can't estimate in the day one, but it comes in very different version. Also, it's not a choice. It is something which you have to do. And yeah, as a corporate citizen or as a corporate governance, good governance practices also, you should work on this sustainability agenda.
Thank you so much, sir, for answering this. Siddhant, you may ask the next question.
So I have more of a general question, not directed towards any particular panelist. I just wanted to ask, what are some of the blind spots for a company, and what should be done to avoid them?
Maybe I'll go first. I think I'll keep it very simple. Great question, Siddharth. I think I'm just summing up my experience of the corporate career, and I think the difference between great companies and emerging companies kind of a difference. And I would say three things which I personally believe. People may agree or disagree. Number one is customer. I think so. I take it as a rule of 3 C's. One is about customer. I think in today's world, customer, you have to go with the customer, and every successful company which has established themselves today, they understand the pain points of customer and they strive to work towards what customer wants rather than trying to what I want, right? So customer is extremely paying attention and being very closely attentive to what customer wants and their requirements are is extremely important. So that customer centricity is. Second, I feel the second C for me is competition. I think sometimes when people or companies or brands, when they're very successful, they stop looking at competition. I think it is an extremely competitive environment, whether other brands or whether it is about technology coming in. And there is ready examples. I've spent a huge number of time with a big brand like Nokia, and it used to be an iconic handset at one point of time, and today no one uses Nokia. I think so. It's got and therefore keep an eye on your competition. You need to always look at that. May be a big blind spot which can be there, right? So third is about the culture. So internally as well in organizations and companies, I think we have been doing this and let's continue to do with this. But I think the open-mindedness, the culture, how people feel about, and we spoke about the crisis last year, how many organizations evolve towards their employees, about their customers, etc., etc. I think that defines the culture of the organization. So in my view, these are the three blind spots, which I think many organizations, some pay attention to it and really, go up that curve and they try to, recognize it. Some of the curve, especially the family-owned groups in many cases, etc., they, adopt a successful model and they just believe and continue with that. So I think that's a journey. So in my view, those are the three things I would just lay it for you guys.
To add to what Alok has said, Siddhant, let me give you example. My personal example, I had an old car my wife was driving, so I wanted to sell it. So there are quite a few car companies right now online you can sell it. One of them is OLX Auto. So I put that ad there and they came, they inspected and they came back. Then they say that they want a NOC from the banker where only then they will assess and tell me what amount they will pay me for this car. So I went ahead and went to Cars 24. They assessed everything, they told me the amount, etc. And they said that you take your call for 5 days, 7 days kind of, you get us the NOC and this is the deal. And they made the deal and I gave the card to them. I asked my banker, they got this thing in 2 days and I sold. So basically today, after 7 days of this, OLX people called me that is the car still available, this, that and all. So I said that boss, you didn't give me a quote even. How could I trust you? They said our internal policies are like that. So I said that if your internal policies are more important than the customer's needs, then God bless you. So that's what Alok is trying to say, is that customer centricity is must. Right. If they would have given me I told them, I asked them to talk to my banker. He said, the banker said that I'll give it in 2-3 days. They'd say that no, we can't reveal the price that we'll give you. So, was hell with your process now. I'll go to another one. Then the culture part, as it's culture of an organization, as Alok was saying, basically how you value your employees there, right? And if you are valuing your employees, I have seen people with 10-20 lakh salaries saving the company crores of rupees just because they are dedicated to it. They will find a way to give the company multiple times than what they are drawing from the company. I have seen this there. So valuing your employees is a must. That's what the culture is, a conducive environment and the value that you create, kind of. So that's, and then competition, if you see what Alok was trying to say is that competition is not, it is about Airtel and Reliance. Competition can come from unexpected quarters. If you see, the Kodaks of the world did not envisage, where the risk management also comes, that how to identify the risk, is that the mobiles will take away the camera. Right? Nobody envisaged that. The titans of the world, the HMTs of the world did not envisage that people will not wear watches the way they wear after they have a mobile in their hand. So these are kind of the competition that could come from unexpected quarter rather than the expected. You every segment have 5-7 top players in a country. So apart from the what is there, the competition which is visible, you have to look for, an organization has to look for the invisible competition that might come in. And in India, this culture is new. In Western countries, people spend millions of rupees to envisage what is coming and how they will, the sustainability also comes from this, that how this type of risk is there and they mitigate that. So all these are, this is a chain. It is not in isolation that the company has to work. All this has to be put in through. Thank you.
I would add in maybe just 2 sentences here. I think what both my colleagues are trying, or rather both my panelists are trying to say, is the pace of change, which is, that's the greatest blind spot. And pace of change across the industry that you're in, the technology that you work on, the consumer, and your customer, which is the partner, right? There is a huge pace of change, not just at a consumer point of view, but also, let's say, at the distributor point of view, because distribution is something which is very traditional. Let's say it was run by the family. The next generation doesn't want to be a distributor, right? There's a huge level of supply chain challenges, not just at the raw material and packing material level, but even at the very existence of your warehouses, So, and hence, there's a lot of change that is going to happen in that sector. Plus, in general, the pace of change with your consumers. There's this historical saying, which is keep your friends closer, but keep your enemies even close. But in terms of corporate parlance, it's the exact opposite. It's good to know your competition, but you literally need to know every step your consumer is taking. And it's not very difficult these days with mobile technology and access. Pretty much, let's say, it's the same consumer who's buying a bottle of shampoo is the one who's also, attending a movie, who's also having a Netflix subscription, who's also buying an iPad, who's also a consumer of, let's say, some other product. So there is a lot of cross-industry kind of information on the consumer which is possible. And what we really track is the entire consumer. Right? The existence, like Nokia example gets quoted many times. It's basically because they lost touch with consumer. Competition was there was technology, and if you ever have time, do go and read the final speech given by the management committee on the last day when Nokia finally lost its battle. If you ever read it, they say we tried, but we tried too late, right? If you are not keeping pace with the change around you, then, it's dead and gone. So that's, I think, the biggest blind spot.
Thank you, panelists, for answering all the questions. Due to paucity of time, we won't be able to take any more questions from the students, but we'll make sure to forward all the remaining queries of the students to all of you through mail. So now I would like to formally end the session with a vote of thanks. We, the Corporate Relations Committee, would like to express our heartfelt gratitude to our panelists for taking out time and gracing us with their presence in this event and making it a resounding success. We are grateful for your contribution to the event, and we'll certainly take many insights from it. Bhavna, if you can share the PPT, please. Thank you, Bhavna. As a humble token of appreciation, we are proud to present you with the certificate acknowledging the planting of a tree through our partner Grow Trees. As we speak, this certificate is being delivered to you on your emails. We hope the tree signifies the values that our financial leaders have towards the growth of our country. With this thought, we thank you all once again, and we hope to continue our association with you in the future as well.
Thank you.
Thank you,
IIM
everyone.
Kashipur.
And
Thank you.
Bhavna.
Corporate Relation
Thank you.
Committee.
Thank you, the entire team. That was a
Enjoyed
very
the
nice
session.
gesture and a very pleasant surprise, I must say, to end this
Correct.
session like this. Thank you so much.
Yeah, I got the one more tree from IIM Sambalpur.
Wonderful, and wish you guys all the best.
Yes.
And very well organized, Bhavna, Rahim, the entire committee.
Okay.
So thank you so much. And once things wish you guys all the success in your future life. And let's maybe someday in person we get to meet some of you, right?
Yeah.
Okay.
All the very best.
So,
Thanks,
we are
Bhavna.
we are open for mentoring you on anything that you want. Ask. You have our email IDs. Please.
All right.
Thanks, organizing team. I think it was very well organized. All the best to the entire batch of students who have been listening to us. We really, sorry, we are really happy and would like to help in any manner possible to continue a journey, this corporate journey. So do reach out by the email ID, or if in life we never know, we can cross road somewhere else and we can have a cup of coffee and chat on the growth path. Thank you very much, guys.
Thank you.
Thank you.
Thank you. Bye-bye.